Happy Thursday morning, everyone. Thank you for joining this week's episode of ATRAM webinar series. I am Jaja Monzon, Product Development Manager and your host for today. So today's session is dedicated to ATRAM's best performing mutual fund of 2022. Stay tuned to learn more about these funds and how ATRAM experts navigated the volatile market to achieve these returns. If you have questions, you may send them as early as now by clicking on the Q&A button below your screen. Before we begin, I'd like to let you know that this session will be recorded and that copies will be disseminated as well as posted on all our social media platforms. If you are just starting out in this world of finance and investments, or a seasoned investor who would like to be in the loop with the latest investment news and strategies, we've got you covered. So subscribe to our YouTube channel, ATRAM Studio. If you have any friends who you think would like this webinar but are unable to attend, a replay of this session will be posted on all our official YouTube channel. So don't forget to click the notification bell so you get notified on all your devices when new videos are uploaded. Plus, please don't forget to visit our website, that's www.atram.com.ph, for more detailed information about all the funds that we offer. You may also scan the QR code to visit our official social media pages. So we would like this webinar to be as interactive as possible. Please don't hesitate to send your questions in the Q&A tab all throughout the webinar. We will also be wrapping up with a quick feedback survey after the webinar. So we do hope you can share your thoughts with us about our session today and how we can further improve our webinar series. So with those out of the way, let me briefly introduce our speakers this morning. So first up is Janil L. Hamil. Elle has been with the industry for 6 years, covering various sectors like power, utilities, infrastructure, cement, property, banks, and conglomerates. He graduated with a degree in mathematics from UP Diliman in 2013. Currently, he is managing the ATRAM Alpha Opportunity Fund, Inc. Also joining us today is ATRAM's very own Lodovico Devi Ulpo. Devi has more than 9 years of experience in the asset management industry and currently manages ATRAM's discretionary fixed income mandates. So prior to this, he was formerly based in Hong Kong as Asian credit trader and analyst at a Pan-Asia credit hedge fund covering Asia investment grade, high yield, subordinated structures, and credit market derivatives. He was awarded rank 2 in the most astute investor in Asian local currency bonds by the Asset Benchmark Research Awards 2022 and has consistently ranked on the top 5 over the last 3 years. He is also a CFA charter holder, a certified financial risk manager, and a certified public accountant. Now that we have introduced our members of ATRAM's competent and experienced team, we will begin with today's discussion by taking a look at the performance of the ATRAM funds last year and their ranking against the benchmark and other peers. So first on our list is the Alpha Opportunity Fund, Inc., which has generated a 2.39 return and outperformed the benchmark by 1.76% and still holds the #1 spot in peso equity mutual fund in the Philippines. So at this point, I would like to call on Elle to explain more about the funds and its strategies. Okay, so Elle, question #1, how did you manage to achieve such returns?
Hi, Jaja. Thank you. Thank you for that introduction. And before I answer that question, let me thank everyone first who attended this webinar. I know that you have a busy schedule, but thank you for taking time to listen to us and let us share our strategy with the ATRAM Alpha Opportunity Fund with you. So to answer your question, Jaja, the Alpha Opportunity Fund has a very clear strategy and has a very defining strategy. The fund invests exclusively in small to mid cap companies, and we'll tackle later on how that's quantified, right? And these small to mid cap companies are both capable of growing faster than market pace and also meet ATRAM's minimum risk criteria. Now, as you may have showed earlier, you've showed them a glimpse of the 2-year performance. But if we stretch that to 5 years, the fund has beaten the PSE, the Broad Market Index, the PSE Mid Cap Index, and we'll see that later on. The MSCI Small Cap Index, and all the other Philippine peso equity funds. Because of this, the fund is consistently sought after by the retail clients. And the idea of of a diversified equity portfolio is both appealing and necessary in today's very volatile world. Another key point of this strategy is that we're picking the blue chips of tomorrow. So when you think about investing in the broad market, you automatically think about the large corporates, the very common one, the very familiar ones, right? You think about Jollibee, you think about Ayala Corporation, you think about SM. While um, Alpha Opportunity strategy allows it to discover the future index heavyweights. So we're digging deep into the stock universe and um, try to identify which ones are going to be the large ones in the future. And because of this, the fund has a relatively riskier profile because again, we're looking at smaller companies and they tend to be more volatile, especially in extreme market environments.
Okay, so you explained to us, El, the actually the clear strategy of the fund. So what's the investment process like for the Alpha Opportunity Fund?
Yeah, sure. Can we go to the next slide, please? Yes. So we did say that we are looking at the exclusively small and mid cap, and just to quantify that, no, the large cap, we think about the usual names that I said earlier. They usually have a market capitalization of 150 billion pesos at least. Small and mid cap companies, they're maximum 150 billion. And why are we looking at these companies, right? Structurally, these are more attractive. So when you look at the growth rates of their net income or even their revenues, they double it faster. Another is information advantage or even information asymmetry, right? These small and mid cap companies, they usually are undercovered, unnoticed by the street, underappreciated. So when we're first to look at these companies, and then when the market eventually look at these companies, while it garners more attention, the stock price reflects that. And often enough, these small caps usually get re-rated. And so this strategy also allows us to exposure for these growth stocks. And historically, I mean, if we look at even the benchmark indices against the broad market index, they have historically performed better than large caps. Now, through this process or through this strategy, we have identified a couple of small cap and mid cap companies that have eventually joined the main index over the past few years. So through this strategy, we've uncovered Wilcon, right? Converge when it first listed, AC Energy, and most recently Union Bank and DMCI Holdings. Now, I did say that this is a riskier strategy, right? This is a riskier fund profile. So it's very important that we drill down and we nail down our investment process. Our investment process is anchored on these 4 main points, right? We have a dedicated internal equities research team. We cover 10 sectors and we go on at least 300 company visits or meetings a year. So that goes into our due diligence process. The second is we're very deeply rooted in fundamental research, right? Because these small to mid cap companies, they tend to still have operational processes that are still not very professionalized, even the management teams. So it's very important that we keep meeting these companies and we really go to their sites to check out the operations of the business. And this investment process, which is rooted in deep fundamental research, allows us to identify not just the growth projection, which is very easy to just like make up, right? Also future blue chips and deep value opportunities. It also allows us to go to our third point, the risk management, right? Which is already embedded in our process to identify red flags and avoid future disasters. So these are still very common, especially in the size of these companies. And then the last point is that our process and portfolio management is guided by more than 50 years of combined experience in PH equity. So it's not just me, who, even though I'm the portfolio manager of the fund, we're also guided by the other portfolio managers and also by our CIO and our CEO. So yeah,
All right. All right. So just to sum it all up, we have actually our very own research, okay, and that makes this fund number one, right?
yes,
Okay. So L, you said this is a riskier asset than other equity fund in the market. So
yes.
if you can just tell us what are the key risks considering the Philippine equity markets right now?
Okay, so what are our key considerations, right, given the current environment? I mean, we've gone through 2022. It was a volatile market, to say the least, a very volatile environment. And we are cognizant that we're not completely out of the woods yet, right? First, the inflation surprise that we saw recently, right? That was even above the top end of what the BSP was guiding for inflation. So we will closely monitor monthly corporate guidance in the first quarter operations, since this will more or less dictate how the corporates feel for the rest of the year. So how it impacts, for example, same store sales growth for consumer companies and the margins especially. Um, this second point is also the consumer and business confidence impact on borrowing appetite and real estate demand, especially. We are also in the middle of earnings season for the fourth quarter of 2022 and for the full year of 2022. So we'll know then for sure how the companies performed in a very volatile commodities market in the past year. But more importantly, we want to get the messaging and the positioning of these corporates, right? The results will most likely reflect the strength in the fourth quarter 22 GDP print. We actually, because we're still experiencing the tailwind of reopening in our economy, so we actually expect 2022 earnings to be quite strong. But again, our key focus is really the corporate guidance in January 2023 trends that the corporates are seeing. The third point is the potential impact of US recession. First, on market sentiment, that's always going to reflect, since we're an emerging market, right? So this may result in depressed say multiples. The second would be the business sentiment, and this would reflect on the corporates still holding back on any large capital expenditures. So they would play it safe and just hold back in their cash expenditures. And the third would be lower U.S. Exports. Another would be the key inflation spillover from the China reopening. So we've already seen key commodity prices like palm oil, wheat, coal, and oil. For us, they've already corrected from their peak last year. But how would China's reopening affect those prices, right? Would we see another high? Would this result in further margin compression for Philippine corporates? So for now, we are expecting the market to trade range bound between 6,800 to 7K, right? As we learn from the corporates, and we gain more solid footing. The next major support would be around 6,500, and our major resistance would be at about 7,500 until we're out of the woods, right?
Okay.
And then our priority is really just being nimble in this kind of volatile environment, especially in the first half.
Okay, so El, let me just circle back to how this fund is positioned and what's the fund's goal.
Yeah, so right now, if we can move back to about this one. So the fund is currently positioned largely in banking. So that's our largest sector exposure. Just because banking basically has the path of least resistance. So we are still experiencing loan growth from economic reopening. We are still experiencing net interest margin expansion from the BSP hikes that we experienced last year. That's about 350 basis points expansion from last year, right? And net interest margin is mainly how that's the bread and butter of banks. And also the recovery of trading gains, which was basically eroded last year for banks. But with the trajectory of interest rates this year, we expect the recovery of trading gains. The next would be a little bit of consumer discretionary, mining and oil, and then gaming for alpha opportunity. But in terms of like trends, main themes, right? We're still looking at high growth and new economy areas. Over the pandemic, there were consumer trends that were stickier. For example, digital banks, right? Clean energy and logistics. It also gave rise to ESG forward companies as their social responsibilities and environmental responsibilities we're in the forefront amidst a very challenging environment. The fund is also poised to take advantage of attractive deep value companies because there are still names out there that are still trading at very depressed multiples. And we're also building some defensiveness into the portfolio because, again, it's still a very volatile environment. We're still not completely out of the woods yet.
Right.
And in terms of like stock picks, so just to be very specific, one of our largest positions would be Bloomberry, right? Our tourism is opening up. China is also opening up, so that would be a huge driver for Bloomberry's revenues. And then the second would be Union Bank. Union Bank is a more consumer-centric bank. And it's still within our market cap limit. So Union Bank is a very high-yielding loan portfolio, largely leans towards consumers. It's a digital first mover. If you noticed, Union Bank's ARC branches that don't look like a typical bank branch at all, right? And its recent Citibank acquisition that would now move it to become the third largest credit card issuer.
All right. Okay. So, Elle, please share with us your outlook for the Philippine equities. I'm sure our audience would love to hear
Sure.
that and the return expectations for the rest of the year.
Okay, sure. Okay. So basically, we expect our base case is for the market, the fair value of the market to be at 8,100. Now, this market is not going to move in a straight line, right? This 8,100, we expect this rally to be more back-ended, actually. So very volatile first half. We're still waiting for inflation to slow down month on month. We're still looking at elevated inflation rate or at an elevated inflation rate back in January. We want it to slow down month on month, for rates to come down, and for risk assets basically to come at the forefront again, right? Because in this environment, investors will still try to play it safe, try to secure returns before going into riskier assets like equities, basically. So even though this 8,100 looks high, it's not going to be a straight line to 8,100. It's going to be more back-ended. Now, what's the range, right? And 5,600 to 9,300 may look like a wide range. And this actually reflects the kind of environment that we're seeing. That we are still, as I mentioned many times earlier, we're still in a very volatile environment, right? So this 5,600 assumes bearish corporate earnings, right? Very adverse effects of reflation of commodity prices in corporate earnings, and also some recessionary spillover from the US to the Philippines that would reflect on depressed consumer spending, and also depressed multiples because that's how we derive our PSA targets, right? So the bear case is 5,600. Our bull case again is 9,300. So this is not even like ultra bull, because this 9,300 is just using some bull scenarios in corporate earnings, right? Some resilience in consumer spending and in corporate margins, but also just using a reversion to average multiples for the PSA to 9,300, and maybe a modest return of foreign flows. And even with this range, this actually reveals an attractive risk reward profile for the index already. So you can't you can't really go wrong just by dollar cost averaging. And not really, not you don't even have to time the market, right? Even if even if I said that the first half is going to be volatile, the risk reward profile already warrants some bullishness into this market.
All right, thank you so much, El. No, just to
Sure, no
sum up,
problem.
so actually, El said that the expectation is around 8,100, and there'll be a lot of volatility for the first half of the year. However, cost averaging will help you with your goal, right? And
Mhm.
also, El said that don't time the market. So that means just do cost averaging. If you have extra funds, just put it in
Yes,
and just leave it there, right? All right.
yes,
So, El, thank you for sharing to our audience your views and strategies relating
no
to the
problem.
ATRAM Alpha Opportunity Fund. All right. So, moving on to the next performing mutual fund on our list is the ATRAM Corporate Bond Fund, managed by Miguel Liboro and Debbie Ulpo. The fund has delivered a whopping 5.22% for a 3-year return and 0.56% for year-to-date return, and is ranked number one peso fixed income for corporate bond. So the fund is designed to generate regular income streams and capital appreciation by investing primarily in the Philippine peso corporate fixed income securities by Philippine companies. So at this point, I would like to call on Devi to explain more about the funds and his strategies. Hi, Devi. We just have some couple of questions for you or more. I'm sure our viewers are interested to know. So first
Morning,
is
Jaja.
good morning. So can you give us a review on the income markets and how were you able to generate such returns? Dev?
Sure, Jaja. Can you go to the next slide? All right. So this is a bit of a busy slide, but let me summarize this quite a bit. So over the past 3 years, actually, it was quite challenging for all the asset classes. You see, we've seen the pandemic, but I think for the last 2 years, the main theme was really the adjustments and interest rates. Interest rates were quite think the center of attention when valuing assets. Over the past 2 to 3 years, we've seen interest rates move up by about 400 basis points. And that's because of rising inflation expectation and for the central banks to actually curb further upward inflation pressure. So as mentioned by El a while ago, at least for the Philippines, we have seen an 8.7% rise in inflation. In the US, we have seen inflation soften up quite a bit, but in the Philippines, we haven't seen that yet. Because of that, for 2022, we have seen the total return of an average fixed income fund to be at around -5%. And just because of a lot of it is really from the capital gains and losses or on the losses side because higher interest rates tend to deflate prices. But as you see in this chart, the net yield of a normal portfolio has been increasing over the past couple of years. And for this year, we think it's a very good setup because the last 2 years is a good correction in terms of interest rate environment. So we think that interest rates or yields in general will help play a significant part of the portfolio total return for the years forwards. Next slide, please. All right, so for corporate bond fund, because of the mandate of the fund to invest a majority of the position to corporate bonds, a lot of our strategy was really on going into the primary market and accumulating position and structuring the fund in such a way that we are able to take advantage of the high yield. For 2022, we have seen a blockbuster year in terms of issuance. We've seen over 500 billion worth of issuance. In fact, in terms of yield ranges, they are quite really decent. We have seen quality issuers yielding around 6 to 7.5%. We were able to were able to take advantage of that and take positions in certain parts of the curve that will be able to take advantage of the still rising interest rate environment, but at the same time have that the higher yield locked in the portfolio for over the next 5 to 7 years. Next slide, please. So how, in terms of strategy, I guess, given a rising interest rate environment, although you have some opportunities here and there, the best way to take advantage of that is to really carefully structure the fund so that you have a lot of maturities and liquidity and be able to reinvest that at higher interest rate environment. So for example, when interest rates are here and it's just about to go up, you don't want to invest significantly right away on long duration asset, but rather you want to have a lot of cash and maturities so that when interest rates have risen significantly enough, you're able to try to take advantage of that liquidity and reinvestment opportunity of yours and lock it in longer for higher interest rates. So I think the question now is, okay, what is the interest rate right now? Then you go to the next slide. So again, I mentioned around 5.5 to 7% is what we're seeing in the market. And I think the question is, will it stay this high over the next few years? The answer to that is we think, in our view, it will not be this high forever. And the large part of that is because it's just this high because inflation is just this high today or this year. We think that when inflation goes back to 4%, 3 to 4%, think by the second half of the year, interest rates will also decline. Therefore, you want your cash to be at work and lock in that interest rates, at least for the corporate bond fund, to be locked in longer because this elevated interest rates, we think, is just temporary. Again, it's just temporary. We think that in this cycle, this is a buying opportunity for funds. Doesn't matter where if you're going to, you have to be able to try to take advantage of this cycle in particular. So just like Elle said, you don't need to time the market, just buy the fund. No? You can buy the interest rate. I think the fund yield right now is around 6%. We think it's also about to further go higher. And we think that once we are able to lock that interest rates higher, the performance of the fund will be more stable and higher, and will be able to provide a higher return over the next few years.
Okay, all right. So how was the fund allocated last year and where is it positioned now? Is it in the longer?
Sure, Jaja. Can you go to the next slide? So how are we positioned? Basically, apart from what I discussed earlier on the maturity ladder, basically having that maturity to reinvest into certain higher yielding instruments, we also have a diversified positioning, just like the equity guys, where we have a significant position on all sectors so that we don't have a lot of idiosyncratic risk of issuers. And a lot of the stability of the fund is also primarily because of the positioning on the structure. I think right now it's about 63% hold to collect, but as we increase our high yielding instruments and lock that in longer, this HTC, the hold to collect, will increase. So what does that do? That means that the fund will be able to provide you that high yields and stability to protect your principal. Again, high yield and stability to protect that principal. And we're able to do that because of the amount of opportunities that we see in the market and will be seeing in the first half of the year. Right now, the fund is positioned 70% in corporate bonds and the rest of it in sovereign bonds and time deposits instruments. Can you go to the next slide? Yeah, can you go back? Sorry. Yes. Yeah, so basically this is the positioning of the fund, and we intend to keep this position over the next year or so and be able to try to take advantage of that higher yielding instruments for the first half of the year. And by the second half of the year, we think that again inflation will soften down. Central bank will pause in terms of their hiking cycle, and we think that interest rates is bound to fall down the road. So right now, it's an opportunity for the market to try to take advantage of that higher interest rate environment.
Okay, so for the inflation, so it will soften on the second half of the year. And also the fund is currently at 70-30, so that's 70% corporates and 30% governments and cash, government securities and cash. And it's actually more the high yield and stability due to the hold to collect feature of the fund. Is that correct?
That is correct.
Okay, so with that, please share with us your outlook for the Philippine fixed income and return expectations for the rest of the year. Syempre, you already mentioned that the inflation will soften by the second half of the year. So what are the other areas that are we looking for?
Sure. So the outlook for 2023 will be a tale of two halves. The first half will be quite similar to 2022, in which we see the central banks, led by the U.S. Federal Reserve and the Bangko Sentral ng Pilipinas. They will still continue fighting off inflation and raising interest rates, because we think that it will take some time for prices to normalize. But in the second half, we think that the central banks will eventually pause and stop hiking, and then at that moment they will start to look at the second round effects of their tight monetary policy. And once that happens, we think that inflation is bound to go lower and entertain the possibility of easing or policy cuts by next year or the year after. So given that, we think that it would be best for investors to take advantage of the elevated yields and look to invest in fixed income funds through this corporate bond fund and other fixed income funds that ATRAM manages. So we think that we will be able to help deliver that total return or optimal total return given the reasonable amount of risk that we're and still making sure to protect the principal. So in terms of return expectation, the fund's yield right now is around 6%, and we think we'll be able to bring that up further higher. So I think it would be safe to say to have a yield or return expectation of around 4.5% to 5.5%, I think. And contrary to what El mentioned a while ago, if for the equity markets, it's not a straight line, you can just buy now. For the fixed income market, it's a different story. You can buy now and expect a steady return towards that 4.5% to 5.5%. So you won't see as much volatility. So I would think that it's for first-time investors, this is a good way to start your investment and accrue the high interest rate environment that this current cycle is providing us.
Okay, so that's what I'm supposed to ask. So what type of investor is actually perfect for this fund? Is it for startup investors or for moderate investors or riskier investors?
Sure. Can you go to the next slide, Jaja? All right. So let's look first to the goal. I think this fund in particular looks to aim to maximize the yield for diversification and has a medium to long-term horizon. And wants to partake in the Philippine economic growth story, but not at the same time not having that significant amount of volatility. So in terms of your question, this fund is great for, number one, those investors that want to start out their savings or their wants to put their money into investments that they have a good amount of risk appetite. Although this fund has a moderate risk appetite, I would say. and you will expect much volatility because of the structure of the fund, which is basically hold to collect. So it's just steadily going up, accruing that interest of around 6% gross. And this is also good for investors who wants to provide an anchor return to their portfolio. So if you have that, you're invested in equities and you want to have some portion of your fund steadily accruing that income with a diversified fund, this is also a perfect way to invest through that. No? So a lot of investors looking at yield stability, income stability, and principal protection, and has that decent amount of return will be poised to take advantage of the benefit of being invested in this fund.
All right. So what I'll just summarize now what Debbie said, but actually this fund is really for everybody. Kasi nga, you can start it from a moderate, if you're a conservative investor, to even a aggressive investor. You can actually invest in this fund, so you can take advantage of the higher interest rates now, and it actually gives out dividends and capital appreciation with a lower volatility, and actually yun nga, it's a steady fund. Okay, so thank you, Deb, for that comprehensive outlook and sharing to our audience your views and strategies relating to the ATRAM Corporate Bond Fund Inc. And there you have it, our top performing mutual funds for 2022. At this point, we would like to move on to the live questions from our audience. So we have several questions actually coming in. So Dev and Elle. Okay, so first question is for, let's see, first question is for Elle. How risky is the ATRAM Alpha Opportunity Fund Inc. and what makes this fund unique from other equity funds in the market?
Okay. I think it's better if I answer the second question first. No?
Okay.
So that will give them complete context, complete baseline expectations for the fund. So what makes this unique, first, as I mentioned earlier, is that we invest exclusively in small to mid cap companies. So just to give you an idea of what that means, a large cap is something like Ayala Corp and its subsidiaries, Ayala Land, SM the conglomerate, and its subsidiaries, Meralco, JFC. More or less, you expect those companies to have like steady growth, right? Steady expectations. Something like a mid cap would be like Wilcon before. Wilcon is now considered a large cap because it's now in the main index. But Wilcon before was considered a mid cap, right? Converge when it listed back in late 2020. Also, AC Energy used to be mid cap, right? So we look at those companies that are still considered small to mid, at most 150 billion in market capitalization, with the expectations that their income and their sales will grow at a more rapid pace, and they will eventually join the large cap index, the main PSCI index, right? So, having said that, to answer the first question, this strategy tends to be risky, right? Because if you can imagine a smaller mid cap company, first, if you look at for example, the management, right? Companies in the Philippines, they tend to start out as family owned and controlled companies, right? And they are still on the path to professionalizing their operations and their management, right? And there's still a couple of things that or a couple of issues or problems that could be idiosyncratic to these types of companies, right? So the profile tends to be riskier, right? Just to quantify that, and forgive me for being too technical, right? The tracking error would be between 5 to 8%. The tracking error just it's a number that tells you the volatility, the standard deviation of the strategy's performance versus its benchmark. So if you look at the most conservative ones or the less volatile ones, would be like an index fund that would be at like 1 to 2%, and then some more active strategies would put you at around 3. So this is really on on the more volatile end, right? The riskier profile. Just to put some numbers into that qualitative description of its risk profile.
All right. Thanks, El. This one is for Dev. Okay, Dev. So in terms of overall return, should I prefer corporate bond fund to total MF, that's mutual fund, to total return peso bond fund UITF for long-term investing?
Sure, Jaja. Thanks for that question. That's a very interesting question because I manage both funds. I would say that when it comes to longer term investing, it would be best to position for both, I think, because at least the corporate bond fund will be able to provide you that anchor in terms of return expectation because it's a steady fund, just accruing just because of the structure of the fund. Total return peso bond fund is a fund that tries to take advantage of many opportunities out there. So when we see interest rates will decline, we go position long, trade it, and long, and then once rates decline, we just sell it and go back to the short end. So basically, you would expect the total return peso bond fund to be a little bit more volatile relative to the corporate bond fund. So it's just at least the mandates for both funds are a little bit different, although they are investing in the same asset class. So longer term, I think the ATRAM total return peso bond fund can do more, but there will be a little bit of volatility. But if you want a steady growth or steady fund, it will be best to have that corporate bond fund. And then again, if you're just going to structure your portfolio, you can do a 60-40 total return peso fund and then 40% corporate bond fund so that you have that anchor in your portfolio.
Diversification.
Yeah, because again, even if you have a balanced fund, I guess you can use that 40% corporate bond fund to provide an anchor to your portfolio and then invest in other riskier assets for the other 60%. So I guess at least this fund will be able to provide you with that steady accrual, steady return, and the other parts of your portfolio can provide that capital gains pick.
Okay, there you have it, guys. Straight from the horse's mouth. He actually give you it's like a sample portfolio management, right? For the corporate, how are you going to invest for the corporate bond or for the total return peso? Okay, and also just a follow-up question, Dev. Do you think inflation will still rise up until the whole year, and at what percentage?
A lot of our government, so inflation is not just something that does it on its own, right? The government is actually there to actively put a lot of pressure on the way down on the inflation side through not just monetary pressure but also non-monetary policies such as importation of agricultural products, for example, importation of other commodities, for example. So inflation, I think, can be controlled only at this point because I think we saw the late surge in January to about 8.7%. At least for the first few months after that, it may stay elevated, but in the second half, once the monetary policies do its job, as well as non-monetary actions such as tariff reduction to increase imports for commodity prices to go down locally and some price controls maybe, then definitely we think that inflation will soften up in the second half. In terms of average, we definitely think that it will soften down, maybe at around it will probably reach around 5% by the second half of the year. Of course, wishful thinking that we think that hopefully the BSP is correct to bring this down towards their target of 2 to 4%. But at least we expect inflation to not stay this high for a long time. We think this is temporary. So in our view, we think that this is an environment to take advantage of the higher interest rate brought about by this macroeconomic factors and lock it in those high yields while it's still there.
All right. So for L, is it a good time to invest in mutual funds, and how much is the minimum initial amount to invest in Alpha Opportunity Fund?
Okay. I'm gonna answer the second question first again. So the minimum
Sure.
is 1,000 pesos, right? 1,000 pesos is very
Yeah.
affordable. And is it a good time to invest in a mutual fund? As I mentioned earlier, um, don't try to time the market because um, that's a very difficult game. The win rate there is very, very low. So don't try to time the market, and you're actually better off just having like a fixed schedule. So cost averaging, right? You mentioned earlier, Jaja, cost
Mhm.
average
Yeah.
throughout this throughout the year, because like um as Debbie mentioned and as I mentioned, the the volatility of both our markets are different. I expect it to be a very volatile environment for equities. For Debbie, he actually expects the first half to be the good time for bonds, right? But if you try to time the market, that's a very difficult game. So when's the good time to buy mutual funds? It's now. And then you ask that question again next month, it's still the same answer. It's going to be, right? And yeah, so that's my answer to that question.
All right. So this is just a follow-up question, Eldo.
Sure.
So what do we expect for the return of the Alpha Opportunity Fund at the end of the year? So what do we expect?
Mhm. Yeah, okay. So I'm gonna speak about our broad market expectations, right?
Mhm.
Not the fund itself. So as I mentioned earlier, also our fair value target for the market is 8,100. So
Mhm.
that's a return of about 18%.
18%.
Now that's not going to be a straight line, right? As I mentioned also earlier, we actually expect it to be more back-ended. So um, my personal recommendation actually is to put your money with Debbie, and then after you reap your rewards there, put your money with me, because I expect the equity markets to be more back-ended actually. So fair value 8,100, and that's about an 18% upside from where the market is now.
Okay. So, Devi, okay. So, in which fund should beginners invest their money?
Sure, Jaja. So first you have to, of course, depending on your goal, it's good to start through bonds first and then get a feel of the market. And as you become, I think it's not the investment, no, it's about having that discipline to keep some of your money and put it into the investment. So you will be able to build that discipline by investing in corporate bonds. At least you will not be shaken off or be nervous by seeing a lot of volatility in your portfolio initially. So as you build that discipline and as you study more the markets, you will have a better idea on where you will need to place your money moving forward. But I guess for investors that are just starting and just getting to know the market, start with the lower risk investments first. So this corporate bond fund is a good start. And it's perfect also for other investors, as you mentioned a while ago. Uh, Even for sophisticated investors that want to anchor their portfolio returns by some form of yield and steady yield or steady accrual. So it's good for beginners. It's also good for sophisticated investors. We think that this corporate bond fund is really good for everyone.
Okay. So, Devi's just saying, if you want to go steady, go with Devi. Diba? Parang, okay. So, okay, for Devi naman, how often do the fund managers review and update their portfolio? Do you buy new or sell existing positions? How often you do that?
Depending on the mandate of the portfolio, no. For the corporate bond fund, this is a steady accrual type of fund. Therefore, if the thinking when we structure this fund is already way ahead. That okay, we are going some maturities will mature this year, the year after. So we structure that fund and use the HTC method to try to capture that low volatility. So the rebalancing or the buying and selling of bonds do not usually happen for this fund as frequent.
Mhm.
For more actively managed funds such as the total return peso bond fund, that is I think the bread and butter of that fund to try to take advantage of all opportunities. But you would expect this fund to be rebalanced less, I guess, on a day to day. The thinking is always strategic, and the thinking is always that yield for lower volatility.
All right. So Elle, same question with you. So how often do you review and update your portfolio for the alpha?
Yeah, so contrary to Devi's fund, mine actually is more monthly, but that doesn't really mean that we're buying or we're changing our positions monthly also. As you may recall earlier, in our investment process, which is very, very crucial to this kind of strategy, um, we want to review, we want to meet with with the corporates at least every month, right? The stocks that are in our portfolio, because it anything can change within a month, right? Especially with this type of companies. So we review our portfolios monthly. Doesn't mean that we're gonna change any positions, but we do take a look at it on a monthly basis.
All right. Okay. So all right. So any last words for our audience? We'll start with Dev.
Start investing now. I think it's not the amount, it's not the money you make, but amount of money you keep and invest that matters, is to unlock your financial freedom down the road.
Okay. How about you, Elle?
Yes, Devi said. I mean, the hardest part is always getting started, right? For the new ones out there, just get your feet wet. Our funds, we offer you our funds, which are 2022's best performing mutual funds, and we are all depending on your risk appetite, whether you're very risk averse or you want to take on more risk. We offer a broad spectrum of products, right? So we have anything, we have everything that you can possibly want. So yeah, and we hope that we help you in your financial goals, even just for this year, right?
All right. So there you have it, guys. So investing really is for everybody. So for the corporate bond, it's actually actively managed, and if you just want to have an anchor or a steady stream of income, corporate bond is for you. And for alpha, if you want to take advantage of the equity market or you want to take on more risk. Okay. So once again, thank you, Elle and Devi, and of course, thank you to our audience. We appreciate you taking the time to join us today. Now, did you know that for as low as 1,000 pesos, you can already jumpstart your investment journey?
Good day. If you are interested in investing with ATRAM, the leading independent asset and wealth management company in the Philippines, please visit our website, www.atram.com.ph. We have all the details you would need to know about our funds. If you would like to start investing, click Invest Now. For further assistance and account opening, you may email our client services team. If you have more questions, visit the website's Frequently Asked Questions page or ATRAM Academy page. We hope this helps. Thank you.
Okay, there you go. If you have further questions or you would like to learn more about ATRAM, please visit our website at www.atram.com.ph. And for our mutual funds, you can visit atram.com.ph funds/MF. Okay, again, if you're just starting out in this world of finance and investments, who would like to be in the loop with the latest investment news and strategies, we have some wonderful resources to get you started. So subscribe to our YouTube channel, that's ATRAM Studio. And if you have any friends who you think would love to see again today's session, a replay of this session will be posted on all our official YouTube channel. Don't forget to click the notification bell so you get notified on all your devices when new videos are uploaded. Also, please don't forget to visit our website, that's www.atram.com.ph, for more detailed information about all the funds that we offer. You may also scan the QR code to visit our official social media pages. Lastly, please answer the survey at the end of this webinar. We would love to know your thoughts on today's topic. On behalf of ATRAM, maraming salamat po. And as always, we wish you and your loved ones continued health and safety. Have a great day.